it sounds like this is something to consider that can be a part of your even long-term care plan. If you need extended care, could you tap into your equity in your home? Does that make sense for you and your situation? I know personally, I see some people even using reverse mortgages to fund long-term care insurance. Or if they're not healthy enough and that's not even an option, they're using that to pay for care for themselves if they want to receive care in their home. So there's so many ways that a reverse mortgage can be used to help fund your retirement goals and to live comfortably, but it has to be the right fit, and you have to talk about your goals and your preferences and come up with a comprehensive plan. But it's something that should be considered.
Absolutely. And I'm glad you touched on long-term care. It's one of my major passions. I mean, I got my CLTC designation back in 2019. I don't sell insurance products, right? I don't have a license to sell insurance. I got the designation really just to empower me with the knowledge of what are the costs of long-term care, right? How does long-term care insurance work? What are the various types of products so that we can work that into our practice as reverse mortgage professionals. But we talk to clients and advisors all the time that are using reverse mortgages as a part of the long-term care strategy, whether to take the funds directly from the reverse mortgage and purchase long-term care insurance. That's another misconception, that you can't do that. You actually can. Or to self-fund care, right? There's a lot of folks that don't qualify for long-term care, or long-term care insurance is perhaps too expensive. The reverse mortgage, the home, can act as the mechanism to help self-fund care as well. NRMLA, the National Reverse Lender Association, they are behind the strategy of using reverse mortgages to fund long-term care. So we have the governing body, one of the governing bodies behind reverse mortgages, behind the industry, the biggest trade organization that now says, yes, you can absolutely use a reverse mortgage to pay for long-term care. And that's been huge.
That is huge. When did that come out? When was that publicized? Recently?
That was really through my efforts, our efforts here in encouraging them to kind of take a stance on this, right? Where do you stand? And, now there's multiple different ways to do it, but the key is it's got to be prudent for the client, right? And so, especially these days with a lot of advisors having fiduciary responsibilities, it's just not prudent to overlook the client's largest asset. And if it's best for them, and it's in their best interest to use the reverse mortgage to fund a long-term care policy, then they can certainly do that. The reverse mortgage industry has clearly stated that this is fine. There's nothing regulatory or compliance-wise that would prevent us from taking reverse mortgage funds, giving it to our borrower, and then whatever they do with it is up to them. Of course, we want it to be prudent for them, right? But there's nothing that would prevent that unless you work for a long-term care producer that wouldn't allow that to happen.
Sure.
But what we find is most of the time the long-term care insurance is being funded because they have a mortgage. We're coming in, we're paying off and replacing that mortgage with the reverse mortgage. We're eliminating that monthly mortgage payment, and we're freeing up that cash flow. And it's that cash flow, that free cash flow, that they turn around and they go pay for the long-term care insurance policy.
Right. Because we know long-term care is an income problem, not an asset problem.
Absolutely.
So,
Absolutely.
Yeah, helping with the cash flow is an enormous benefit.
It is.
Yeah, love it, Steven. Such great info.